My friends, good day. I was reading a financial stability report from the Bank of England, and it's pretty scary. It's pretty scary. And I'm going to tell you what that could mean for us, for everyone, beyond the markets, the countries, and so on. So I'm going to tell you, the Bank of England regularly publishes financial stability reports that are closely watched both in England and internationally. And there's something you need to know, which is that this bank, since it's a very important bank, has to be careful about what it says. That's what it means. They are very diplomatic, very measured in the words they use, because they know that with one wrong sentence or something that's misunderstood, it can trigger a disaster. So they go easy, and then keeping this in mind with the fact that they do everything to speak diplomatically, the report is completely shocking. It's not just about the British, it concerns Europe, it concerns France. Germany is really something that's going to be hit very hard. The first point they notice is the overvaluation of assets, that there's a very significant overvaluation on the stock market. The terminology they use is truly shocking. They say, we haven't seen such a level of valuation since the dot-com crisis, the dot-com bubble. It's a bubble. That happened in the early 2000s when there were a lot of companies that were overinflated. Let's say because at that time the internet had arrived and was becoming mainstream, even though in reality it's older than that. But it was really starting to become mainstream. And all the companies that bought a .com domain name were creating a website and saying, we're doing this. So it brought investors together, attracting loans and such, even without a clear business model at times. Afterwards, there was a huge crash. The market collapsed suddenly, and it affected a lot of people. By the way, here's something funny. If you want to check it out, look at Cisco's stock. Well, Cisco was at $80 back then, around 2000, 2001, and then it crashed. Do you agree about the dot-coms? It bounced back a few days ago, last week, when it reached $80 again. It actually took nearly 25 years to recover. That's the investor who bought at the peak. Today he can breathe. That's it. Today he's in the green. Well, at zero at least. So I was saying that it was an extremely powerful warning from the Bank of England. Now he's adding more, including AI. Since AI is a huge bubble, it refers to the operators, hyperscalers, and major AI operators. Well, they need to build data centers, they need to build power generation stations. All this because they want to build mega data centers in places where sometimes there isn't even electricity. So they have to generate this electricity themselves. They have to add batteries, add generators, solar panels, whatever you want, all that. It's estimated that it's about 5 trillion in investments, and out of those 5 trillion in investments, more than half is bank loans. Why? Because as soon as we tell the banks that we're working on an AI project, over there, it's like we're in the dot-com era. They open their checkbooks and start signing. If it's for Leah, sure, I thought you wanted to buy real estate or invest in farms. You see, but as long as it's for Leah, I'll give you the money. Banks lend Leah money. What will happen? What if, imagine, what if there is an AI company that defaults or goes bankrupt or collapses? Well, there you go. You have not only this AI company collapsing, you're going to have the bank that lent it a lot of money, which is overexposed, which might have liquidity problems, and then you have the other banks who, seeing that this one is taking a hit because it was overexposed to the AI, will start to de-risk. They'll start selling off heavily because they have to, transferring the debt and selling everything. And so that will create, in a very short time, a lot of market movements, you see, and all of them downward, and there you go, and it can cause a sharp drop. The Bank of England has also found subprime in the auto market. There are 2 American companies that have defaulted in recent weeks. And it's very serious because you realize that in 2008, what pushed us into the abyss globally, what was it? It was subprime, it was bad quality loans, mortgage loans. It means that we lent massively. We gave C-grade mortgage loans to people who were not able to pay them back one day, and so we lent them a lot of money. I talked to people, they said back then, today, if you want a mortgage loan, they'll give you a hard time. It'll take you weeks, months to get it. Back then, there were people who told me they went to the bank just to change their address or report a lost card. I ended up with a mortgage loan because they'd always ask, since you're here, don't you want one? They'd say, we have an offer, we can give you one, but I already took two. Yes, but we can give you a third. That's how it was back then. So they ended up lending to a lot of people afterwards. Since they started to get scared because they knew what they were doing, they knew they had lent to people who wouldn't pay back, they started buying CDs. You see credit default swaps, if you want. I explain what that is in another video. I'm going to use an incorrect term. It's a kind of insurance, but it's not insurance. The word insurance is really incorrect. It's wrong, but just between us. I'm not saying insurance in the regulatory sense of the word, but in the common sense of the word, it's a kind of insurance that they buy to protect themselves against the fact that the end customer doesn't pay them, so they bought CDs. What do you want? You saw the CDSs start trading and circulating in Europe, then suddenly, bam, the day when there was a day when it all collapsed at once, right? Well, today they're doing subprime in the auto industry, which means they're selling cars on credit to people who can't afford to pay. Yeah, it won't even be the second installment. Union Bank of Switzerland is already exposed to $500 million, just to let you know, as far as we know, right? We're in the process of creating a bastard mix between the scenario of the 2000s, the dot-com bubble, and we're also repeating the scenario of 2008. And all this in a context where the financial report from the Bank of England says that the world today is in a situation with even fewer options to absorb the shock. That means if there's a shock the same size as what we've had before, well, a lot of people are going to end up on their knees. And now we're getting to an important point, a point that's really essential for you and me. This time they say there are a lot of financial institutions that didn't exist in 2008. There are financial systems. I'll just give you an example, cryptocurrencies. There were no cryptocurrencies. In 2008, they didn't play a significant role. People didn't discuss cryptocurrencies in 2008 since they had no value then. Cryptocurrencies weren't involved in 2008. There are plenty of neobanks. There are plenty of private investment systems. All of that didn't exist. So none of these systems have been tested. In a crisis, you know what I mean? If a crisis hits in 2026, those systems, it will be the first time in their history that they'll go through a mega crisis. Will they survive? Will they survive it? Well, that's a mystery. And that's where the question comes in. Would you survive a crisis? Could your finances handle a crisis? Here's why. Back then, personally, in 2008, I was living in a studio apartment. I was renting a studio, and I owned a moped. Well, a red scooter, I think it was a Honda 125cc, that was all I owned, and a suitcase, all right? That was all I owned. I lived in a decent neighborhood, though there were sometimes fights at night, that's all. When the 2008 crisis happened, right? Me, I wasn't affected, although actually there was an impact, but it wasn't what it seemed. It's before this scene that I'm telling you about. I owned a small service company, but it went under in 2008. Why did it fail? It went under by contagion. Because some of my clients who were important, well, they themselves went under or cut their budgets. So as a result, I ended up in that situation. As they say, I was hit from the front and from the back. So I had to fall back on the job market, which I had left just a few years ago. You see, I mean, it still plays an important role. So what I'm trying to tell you is that at the time, it had this impact on me. My little company went under, and then I ended up finding a job, but it could have been worse, you know. I still found a job. It wasn't the end of the world. So my company went under. I found a job. Okay, that's fine, like that. What will happen this time? How am I today? Personally, I'm thinking about it, you see? How are you doing today? Have you thought about your finances? Have you thought about what you own, your real estate, your savings, your crypto? Maybe, I don't know, stocks. Okay, where are you at today? What if a crisis like 2008 happens? Where were you then? Maybe in 2008, you were still in high school. You know what I mean? Maybe in 2008, you only had 50 euros in your account. So in 2008, the most you could lose was 50 euros. When you're at rock bottom, you can't fall much further. Where are you today and how will you survive? What if another shock like 2008 or an even bigger one happens? That's why I think you need to really think about it, not just watch the news. I'm talking to you about the Bank of England. All that, well, you might say, yes, it's theoretical. We don't care about all that. But no, these things are very serious. They can affect everyone. They can affect every person, you see, so you have to be careful. All right, my friends, I'll leave you now. I hope you're doing well. And then I'll be back in another video. Lately, I've been a bit quiet on social media, well, on YouTube, because quite simply, I've been writing a lot lately. You know, sometimes I go through writing phases, and so I become a bit withdrawn. I talk less now, write often, but sometimes stop. Then you'll see me frequently making videos. It's just phases, they're mental phases that I go through. All right, thank you, my friends, for listening up to this point, and I'll see you in the next one. See you very soon. Goodbye.